cheated. All right, everybody. We are back. We're back. I can't believe how fast that time went.
We were on holiday break for quite a while now.
We were episode 87.
Woo.
Pickers Market. Wow, we're getting up there.
Couple weeks off, right? Hopefully our systems. We've had a few glitches the last couple episodes.
Yeah.
So sorry to our listeners for that. We are working hard on that.
Yeah. Gremlins in the system.
Yeah.
Well, we'll kick it off with two truths and a lie as per usual, and then we'll maybe dig into a little holiday catch up to see what everybody was up to, because it's been a while. So digging right into it, two truths and a lie. We'll start with A. Western Digital was the best performing stock in the S&P 500 for the year. B. Record levels of merger and acquisition activity occurred, with dozens of deals exceeding 10 billion.
Is it just for 2025?
Just for 2025. So this is going to be kind of a year in review and a look forward, look ahead. So C, passive flows declined in 2025 as investors rotated back into active strategies for the first time in years.
Wow, those are good questions.
Yeah. So I don't know if you need you need to reread. So I'm gonna.
I'll start just because they're fresh, because I don't have the sheet in front of me. I'm gonna say. That would be surprised if the passive, that one seems to me stands out as, I think I would have heard more about that on the media. I'm going to say that one's false. I think although I'm
the Western
torn.
Digital, you mean?
What?
The Western Digital, you mean? Or
no, Western Digital, I think is true.
Yeah.
I think that was the first one. I think the B, I think was that one kind of, no,
the
more
M&A.
question. Yeah, question on M&A. That seems a little high, but the fact that
record levels of M&A, not just M&A.
Yeah.
Right.
Yeah, that's what I'm saying C is false, because I would be surprised if active managed, actually passive, have a little less share. Lisa, what do you got cooking for us?
I had kind of the same reasoning that A, I think, which is a data storage company. I think
that's a surprise if this is true.
I've read that actually, so I know it's
Wait,
true.
you cheated?
No.
Lisa.
That was no. That was before, but with the review that you get in the newsletters, what was the best and stuff. So I've read that. Passive flows declined materially in favor of active strategies. I've heard that as well.
Oh.
The word materially throws me off a little bit in here, but
Kyle's
I believe it's
kind of stuff.
But I believe it's true. I think it's the M&A, because again we have record levels, and he was throwing around that word again, and I don't think it was it picked up again. Yes, was good for the big boy banks, but I don't think it was record levels. It just picked up again and kind of finally revived a little bit, but not record levels. So I think B. That's a long word.
Kyle will let us know.
Well, I gotcha.
No.
Is it A?
No, it's C. You were correct.
Nice.
C was the lie. So it was record levels of deals exceeding 10 billion.
Oh, the caveat on that.
Western
fine print.
I didn't go to the fine print.
A is a little interesting because there is a caveat there. It is Western Digital was the best performer throughout the entire year. There's a little asterisk by it, in my opinion, because SanDisk was spun out late in the year, and that was a substantially higher return performer, but it wasn't inclusive for the whole year. It was a double the return of Western Digital.
Was it really that much?
Yeah, it was up 500% or something like that.
Missed that one.
Yeah.
I knew Micron had a big year, so I figured Western Dig.
Yeah. But I was surprised that, data storage was like, thing, right?
I think the first 3 or 4 best performers are all data storage companies.
Yes, right.
Which crazy over the years I've been doing it. Those are kind of hot and cold, and they can be really cold because it's more of a commodity base. That the fact that it can do multiple 100% returns crazy.
Right. Okay, so let's roll into some post-holiday catch-up. So how was it? What did we do?
Good.
We had kids home. We had what did we have going on?
I'll start. I have 3 kids in college, so it was I like the chaos when they're home, and it's exactly what we got cooking for the last couple weeks and another couple more weeks going forward, which I love. So it's fun having the full house again versus, this is, I think if you listen a few times, I'm empty nester for the first year. So it's always nice to have the kids back and hearing what they're doing and stuff like that. So just busy, just typical seasonal busyness. How about you, Lisa? What do you got cooking?
Well, nothing too specific. It was pretty relaxing and laid back. Some friends that we invited and got invited. Some friendsmas situations, and for New Year's Eve as well. So it was kind of laid back, I would say.
And all your Christmas stuff is full on, still green light go. And yours tree still up or
Literally, no? It lasted past Christmas. It went to the 26th. My wife waited that one day. It wasn't Christmas night.
That's pretty good.
That's so sad.
Yeah.
I see it like that way. If you look outside and you see the white fluffy thing outside, coating the ground, that means Christmas for me. So
nice.
The tree will for sure live another month at least.
April, I'm calling it.
How about you, Kyle? What was yours like? And is your tree still up?
The tree is still up. We usually take it down kind of next week. Kind of is like the standard. It's not too long, but it's a real tree, so like the needles start getting
it deteriorates
crispy,
pretty fast. Then,
fire hazard.
Yeah, it's a fire hazard. So, so we do that. But yeah, I mean, it was good. It was busy. We've got the kids running around, and Santa came, and it was a great time. And
no coal, a lot of gifts.
There was no coal this year. That was a surprise. So I usually get a
surprise for you. Do you get
for me? I usually get a couple little pieces of coal.
Yeah.
So it's
not the kids though. I mean,
no, the kids don't get the coal.
Little angel
not
babies,
yet.
Yeah.
Not yet. There's time. But yeah, it was good. It was good. So but yeah, the people are sick though. Everybody was talking to. I'm like, man, everybody the flu.
Yeah.
We're friends with a pediatric nurse at the children's hospital, and she was saying that it was just like cases are higher than they've been in years and years and years. So
yeah, it's crazy.
It seemed like people are hopefully nobody was sick.
A couple in our household, and I was fine.
Yeah,
not bad.
Yeah. All right. Well, let's get into it. So this episode, we're going to be so over the break, we were watching Back to the Future, and where they have you ever seen that movie?
I haven't seen it.
Michael J. Fox, it's a classic 80s movie. They get into the DeLorean, like the steel
and they have a special car, right?
It's a special car, right?
I've heard about that.
So they get into it, and it brings them back in time, and then they have to go back to the future, right? So there's 3 shows of that, and in the second movie, spoiler alert for this 40 or 35-year-old movie, they go into the future 30 years, and they bring back a sports almanac back to the current time that lets them know what sports teams across all the different kinds of sports won for the 50-year period or whatever, or 30-year period. And so, if you think about betting,
that is a huge advantage.
Yeah, huge advantage. You're making bets, right? So watching that made me think like, if we look back at the last few years, markets can't be good after 2 such great years. You wrote those words. So in 2023, we had a plus 26% for the markets. 2024, we had plus 24%. Last year, 2025, we closed out plus 17. So the big question is, can it be a good 4th year? And if you look at the Wall Street expectations, I was just mentioning to Keith before we came down, Goldman's out thumping the table with a plus 12 expectation for this year and a plus 10 for next year for 2027. So that would be,
which is interesting and a very change in line for Goldman, because when we think back a couple of months, they came out with a projection. Hey guys, you can only expect like 2 to 3% for the next 10 years. And that kind of ruffled some feathers, like what the hell is going on?
Right.
And now it's like, you know what? Maybe we were wrong or something.
Well, it's, it's like the valuation, the tug, of that. It's a new world there. So, so I figure I would just go through a quick recap of last year on some of the, kind of month by month, and then we can make our own little predictions and talk about some, some questions from there. So it's easy to forget. As I was putting this together, I was like, "Oh wow, this is really."
It's a good list. I like it.
So
rifle through some of that.
So in January, the days tick by, and it's like, what happened again? So we kind of touched a little bit on this, I think, with the Binger special. But it was easy to forget because it's like, what happened? Oh yeah, the tariffs were the big thing, and there was some other stuff. So this was helpful for me. So hopefully the listeners will have their memories jogged as well. So in January, the top headline was AI bubble fears after the Chinese DeepSeek launch.
That was so surprising when I read that, when you
Yeah.
sent that out yesterday, because I was like, that was in January. I
Yeah.
would have put that in my mental note like to March or
Yeah.
That's what I
April.
would
Like
have too.
I
Yeah.
wasn't.
Yeah. So that was January. And what you saw was tech volatility early with a broader risk sell-off there. February, we saw inflation slow down, trade pause, lifting the U.S. equity. So the S&P erased the losses from January. And we saw a relief rally on the macro data.
So the markets finished down in January?
Yeah. Mm-hmm.
So January goes the year, I guess.
Yeah.
Wasn't the case.
Right. It was not the case. March, we saw tariff expansion triggers more sell-off, so broader equity weakness there. April, we had Liberation Day. That was like the thing that crystallized in my mind, where it was like, April 2nd.
Yep.
And that
Everyone knows what happened in April.
everyone knows what happened in April, right? So that was tariff sparked that global
Mhm.
market crash. So we saw a peak drawdown of 2025. In May, we saw a temporary U.S.-China tariff truce. That was the biggest headline for May. And so we saw the largest single-day rally throughout the year at that point. In June, we had Israel strikes on Iran, push oil and safe havens. So equities were kind of wobbling, but oil was +7 and risk assets were kind of moving wildly. So geopolitical risk took front and center
Almost
stage.
forgot about that.
Right, with the Strait of Hormuz and all that,
Right.
the ships and
Yeah,
stuff.
like, is it going to get closed up or like, right.
Mhm.
I feel like that comes, it's like cyclical, like every decade you have like the Strait of Hormuz is like always, it always
Front
comes
center,
back.
yeah.
Yeah. July, we had mega cap earnings and tech cap value divergence. So Microsoft joined the $4 trillion club, which is an incredible number to think about, and tech led returns. So tech went from January, major volatility, worries about DeepSeek, to we're full gas again. In August, we had soft employment and renewed tariff weakness, tweaks fueling the Fed cut expectations. So what we saw were bonds rally heavily, and equities did see some gains on that Fed cut expectations. September, we had the government shutdown, risking data releases, disruptions, all that kind of stuff, macro uncertainty. So that was really mixed markets and some volatility, and that was a good segue into October, November, where you saw labor weakness, macro softness. Everybody was unsettled, no data availability, and then the AI bubble kind of starting to be more in the headlines. October, Nvidia hits 5 trillion, S&P new highs amid that AI spending optimism. Breadth was in the news. And then November, we had soft inflation, rising odds of Fed cuts driving a rally. And December, we saw end of year moves reflect the Santa rally. We did see it. It was there. And then rate cut pricing. So we saw seasonal and monetary tailwind. So all in all, kind of a wild year if you think about it. A lot of geopolitical issues, a lot of, narrow market movers. So the question then is, I guess to summarize by quarters, kind of like AI valuation, geopolitical trade. You had earnings kind of in second quarter, and kind of policy shock, geopolitics were a theme throughout the year, and rates, and then AI. It was kind of like those three things. So with the turbulence that we saw, this is where we open it up to say, okay, well, what key themes, risks, catalysts do we see for this year? So is it going to be more of the same? We've already seen just in the opening hours of the year, a major geopolitical shock, but the markets haven't reacted at all to Venezuela.
No.
Not really. It's more of a wait and see.
Yep.
So I'd be curious, what do you think, Lisa? Where, we're in January now. We've already seen a geopolitical extension. What happens from here?
It's always interesting for me because a lot of people kind of say, okay, this was the prior year. This was all the issues, all the things. And now we have a new year with new things. I was like, that's just probably a behavioral bias. It's like nothing changed, we just
Couple
switched-
days different,
we-
right?
Yeah, right. We just switched the years. Everything is still, there. And I think that's a lot what we will see now is like basically a continuation of all the things that we saw in 2025, maybe to a different extent. But
Meaning AI,
right.
Fed,
And I think AI
geopolitical.
bubble fears, that's not going anywhere, right? I mean, I think it's more it will be determined by earnings, right? What these companies are saying with capex spending and all of that. We saw that with the last couple of earnings season, especially with the AI, that investors are getting a little bit iffy or punishing certain companies, and we see some divergence there also among the big boys. Then we heard a lot about the circularity use of that. So that will be a much bigger focus for this year as it was last year. But overall, the bubble fears will not go away, I think. It probably flares up at some point a little bit more than others. Also, the next thing, tariffs. I know nobody can hear it anymore. It was the big 2025 years, but we're still not over it, right? Because we're waiting for a Supreme Court decision now, which should be somewhere in the first quarter, probably expected to be released if tariffs are deemed legal or illegal. If they're deemed illegal, what does it mean, right? I mean, I think the overall consensus is, okay, good, then they reintroduced it with a different rule set, so nothing should change a little bit. But there's still like policy uncertainty, which brings me to the next point, which is we have an election year, right? It's midterm elections, which years historically for market performance in midterm election years, especially in the first 3 quarters, well, we see a lot of campaigning and do not know yet what it means. Will the majority of Congress be lost and president does not have as much, wiggle room anymore or something? And we might see like a, kind of divided Washington again, which
gridlock, which we haven't seen for a
gridlock.
while.
Yes, thank you for the word. So a lot of that, which again feeds into tariffs. There could be then a discussion if they can be reintroduced, if they're deemed illegal, and all of that. So historically, midterm years are more volatile because of all the policy overhang. After it's generally stronger. Then we have the geopolitical stuff going on, right? Which was there last year. We still have Russia, Ukraine, Israel. We now heard about Venezuela. We have more Latin American countries, tensions. Greenland is still some tensions going on. What happens there? So I think nothing is resolved. It just gets added on, which also feeds into the policy uncertainty. So I think overall, long story short, there's a lot of the things that were there that are still with us, maybe in a little different ways. But yeah, that will be the big topics, I think, for me.
And then before we get Keith's view, what's the biggest tale or kind of like wildest outcome that would be unexpected, do you think could happen?
That would be unexpected?
Yeah. So like we saw last January, DeepSeek came out of nowhere.
Yeah.
Obviously, that's a kind of a loaded question, but
I think when we stay with DeepSeek here, then and with all the AI, that still drives the bus over the last 3 years, right? And there's some recency bias. It's like, okay, U.S. exceptionalism when it comes to AI, it did so over the last 3 years. We have the best companies in the world in that space. It's very important that this is continuing to do so. And then China came out of nowhere with DeepSeek and it ruffled some feathers. And since then, it went pretty quiet over there. And we kind of hear some rumors. They are not as behind as we all like to think they are. But we do not really hear a lot of that. So I think that could be, to feed into the same thing, a surprise that they come out with something that sticks with us a little bit longer than DeepSeek and has a little bit more implications. Then where all of a sudden it shifts, where it's like, oh, okay, they're not as far behind. We have to, change our narrative around that, which can be a surprise because I don't think that's priced in. And it's very quiet around that. And I don't think they're as far behind as we all like to think they are.
Yeah. How about you, Keith?
Wow, well said. No, Lisa summed it up. I don't think just because you flip a calendar, it means the old issues go away. I think they're still here. The one thing I'd probably focus on, which you just talked about a little bit, is AI, but I would do it from the potential positive, the productivity of AI actually becoming a little bit more ingrained in businesses and becoming more efficient. That's where you could see some upside. Now, that being said, that could also cause some jobless, unemployment to increase a little bit. So the good and the bad, I think it could increase, corporate earnings a little bit faster, be a nice tailwind for that. But that being said, it's could potentially cause some pockets of weakness in parts of the labor market. So that would be the thing I'd be watching for next year. I mean, other than that, I agree with everything Lisa said about, geopolitical still there, tariffs. I think I said this before, 10 years from now, we'll look back at 2025 and it'll be the year of the tariffs. As much as Kyle went through that list, I think April 2nd's Liberation Day is burned in everybody's head. And maybe they get overturned in tariffs this year, and that would be the reverse kind of story. But I do think Lisa mentioned it. I think there'll be some other versions of tariffs applied. So I think that's going to be status quo.
Another question that we haven't mentioned yet, but a couple of times over the last couple of podcasts, which is also like said to be a big topic now because the president is about to announce the new Fed chair, right?
Right.
And now when we think about, and Keith mentioned it the last time that he's saying he thinks, or you said, the Fed has way more implications on the market that you would like to like them to have, right? Because it should be more about earnings. And now it's like all about Fed, and every word in their press release gets completely pulled apart if we can kind of get their thinking, and they're more divided in their opinions. And now we probably get a Fed chair that is less independent-ish, maybe. So do you think that could be a huge risk, or do you think market is expecting that and just rolling with it? What do you think is how big is that risk?
I think there's definitely a little risk, but, and this may be a cop out, but I actually think it's priced in. I think the expectation is, that the U.S. has to roll some paper, and the interest burden that we bear today is higher than the defense budget. And if we roll the paper at, 4+% from what's the paper rolling right now? It's like 1 and 1.7 or something like that.
It's a big number.
That's going to be a huge problem. So whether it is politically expedient or not, I think that the quote unquote smart money already has that priced in to a certain degree. Doesn't mean that the market won't move in relation to that, but the views of whomever the new Fed chair is going to be, I mean, we have a pretty clear view between the two. I think that'll be, I would be surprised if we did not see 3+ cuts this year. And
do you think that's more like a blip? Because we heard a lot in the headlines and news that can be the next big market direction is the Fed chair announcement. And I don't know if that's maybe a little bit kind of overstated.
They've been talking about it for a year,
right?
so I don't actually think that that's like a big move. Personally, I don't think that's a big mover. Will it be confirmation? You look at poly markets and like people were worried. We just flip back to November and it was like 80% no cut. And then like a week and a half later, it was 90% cut. Yeah. And so it's like, people are like bipolar about it.
For sure.
Right.
Yeah, no, I think, those are good discussions. What next year, it's gonna be an interesting, or this year, I should say, no, we're in 2026, but there'll be a lot of, when you went through that list, I'm like, gosh, there's a lot of stuff that happened in 2025. Yeah. My guess is 2026 is going to feel a lot the same.
Yeah.
But I think, you ask Lisa what, potentially is not the black swan, something that worries you about it. I think it's the one thing that the outlier is maybe the productivity of AI is a lot better. So that would be
a very positive outlier.
But I do worry that something does disrupt the kind of the big guys on the tech side on the AI production, and whether it's DeepSeek or maybe it's energy efficiencies and chips, that something comes out and all of a sudden some of those plays that are on the build out, not that it can't happen, but maybe it'll happen at a cheaper thing, which is actually better for consumers and the overall economy as well. So, but it may not be good for some of those big guys.
Yeah. For me, I look at some of these other questions and they all kind of like tick and tie together. So, you think about some of the themes just from the market perspective and not like from an internal standpoint, not exogenous, like the interest rates or the, whatever. I think about sector rotations, tech was clearly the winner, and it's been for quite a while. And growth has been a dominant factor in portfolio construction. Value did lead last year.
Hot out of the gate, if I remember, right?
Real hot out of the gate. And this year, we're seeing like energy complex, that's traditional, value. So I think we had talked so many different times about market concentration,
broadening out.
Broadening out.
Waiting for
we're still waiting for it. And so I think, as a prediction for me from this year, maybe it's going out a little bit on a limb, but I think seeing more chaos in the geopolitical sphere, just in general, emboldens other actors, other countries, other, like things, the chessboard is set and things are already moving around a bit. So I think with, last year we saw one thing that wasn't on this list was, I don't remember what month it was. Was it in February, March with Iran and the bombing of the facility,
the bunker bomb? Yeah, that was earlier in the year.
I mean, that was like right away. So I mean, that was also a geopolitical event that was fast. And so maybe we just see that with Venezuela and that's it. But I feel like there's probably more on the plate there. So if that continues and it's still in the news cycle, I would be very surprised if you did not see people rotating in to try and see some value. So like, for instance, yesterday we saw, the big integrateds working well. So Chevron, Exxon, companies like that. And some of the U.S., centric, the Occidental Petroleums, the Diamondback Energies, they were not working. Defense companies, so materials companies, they're like Lyondell, for instance, they have a heavy crude refinery in Houston that they bought in 2006 from the Venezuela assets that they had just idled and basically decommissioned. That's still on the books, and they could, even though they're old assets, that they could turn them, right? Yeah. So like, some of these spaces have been so beaten down in the last year, 2 years. I mean, think about staples, think about healthcare, think about materials. Those were awful, awful performers. So I think with some of these additional points that are happening, I could see broadening out, sector rotations. I could see value coming back into play, and I could see small caps. We talked about the IPOs and the deal, M&A, the deals, even though mostly it ticked up and there were some records above the $10 billion deals. It hasn't been enough for small cap.
No.
So is this year the year? I don't know. It's maybe waiting for Godot at this point, but I'd be curious. What are your thoughts on any of that?
On broadening out, you mean?
Yeah, just any of it.
I think, it's tough because I think talked about the last year, the year before about that, right? At least for 3 years now, right? Since tech took over, we talk about broadening out at some point, and probably, when you expect it the longest time, at some point you're right? So I think there is more evidence on the horizon that you mentioned. I agree with all of that. That we can finally see that happening. It would be healthy for the market, definitely. It would bring like the value of active management completely in the forefront, right? Because then it's even more important to kind of stock pick and do more here if not only 10 companies are driving the bus, basically. And it would also put some pressure off the Max 7, right? So especially when we see, AI is just getting a little bit iffy at some areas, that would help with that as well. So certainly hopeful that it happens. And as you said, there's some sectors that are definitely more on the forefront, like industrials, for example, had a great year actually last year, right? The third best performing sector that came basically a little bit more.
It was pretty narrow though,
right?
It was all the AI. It was all the AI adjacent names.
Yeah, but still, like there is more to the horizon there that we are not talking about a whole lot yet. So, I certainly hope so. It would be helpful.
Do you think you'll secure another performance cup with precious metals?
Definitely. I see a broad future ahead of securing the cup. Because with
Nice.
all that's going on, I was like, I have the right portfolio for this.
Yes.
Yeah, Lisa wanted. We gave her a little award this morning for that what that comment was. So we generally have a cup here, portfolio performance cup, based on absolute return and kind of benchmarkish kind of return. More subjective to whoever's running the thing. And this year I was tasked the duty of handing it out, and we gave it to Lisa. Fantastic first year as a portfolio manager, and you got a precious metal cup, so it's awesome.
Yeah.
Good job.
So she's hoping for the Fed independence story to crater.
Oh,
so
yeah, she's
that precious.
anti-
So it's conflict of interest.
Yeah, that's just to be clear, we should put this up front. That's
I
why
have to be.
she's pitching.
I have to be putting a little disclosures out there when I'm talking about that. Right?
Yeah.
I'll just jump in. My last prediction, I think, for this year will be a lot of volatility, a lot of rotation. So it's going to be hard. You're going to have to pay attention. It's going to be, I think there'll be some
on our tippy
aggressive
toes, yeah.
Yeah, it's going to be an aggressive year on rotation, but I think the markets grind higher over time.
Do you think it broadens out, or is
I think it does broaden
Okay.
out. And I think if you were looking for the full year, an area that's kind of hasn't really been that great, I would say, is consumer discretionary. I think that's
a hard one.
That's a hard one. But I think this is the year. It's been an underperformer for a few years now. It's if I'm right about AI being jobs efficient, and I think people will. Again, it's a balancing act. If unemployment goes too high, that kind of ruins that.
So consumer discretionary is a hodgepodge too, like industrial. So are you thinking like retail, like soft line, or like home builders?
Little
cars,
home builders, a little bit of like Amazon, and just kind of the broad-based retail, like restaurants.
Yeah.
Just kind of, I think people will feel better about things. They'll like, okay, I think, which is kind of it hasn't been an area,
but
that's
less
been
of the
great.
durable goods.
Yes.
More of the experience over things.
Yep.
Okay.
So are you expecting then that the K-shape economy, basically, that the higher income consumer is spending more than the and the lesser income consumer less? Are you expecting that K to tighten a little bit?
Bit, yeah. I think that bottom leg of the K actually starts curving up a little bit. There's signs of you're starting to see it, even on the jobs that we're talking about. I think the ones that could potentially, if AI impacts, would be on the upper end, the white collar jobs. Those could be negatively impacted, but I think that bottom part of that K starts curving up, and I think there's a lot of incentives this year with tax cuts and things like that.
They'll get a boost for sure.
I think they're getting a boost,
comes.
so I think that's where you could see that pick up, which I think would help broaden the whole consumer. That's why I said I like consumer in general.
Yeah. Okay. Well, so to close it out, we've got one last prediction to make, and I didn't put it on this sheet, but we're making it. So if you had to pick, so going back to the beginning, right? Western Digital, best performing stock. And I almost put the worst performer on there because I was like, oh, what are the worst performers?
What was that strategy?
The worst performer?
Yeah.
I don't remember what the name was, but it was all there were I pulled the bottom five, and every single one, consumer staples or healthcare. And Decker's was the number 2 worst one. I forget who the number 1 was.
I own that in my PA. I'm very well aware of that.
Oh wow! I'm gonna have to take that cup back.
Yes. So Decker's was maybe there'll be a big rally this year. You've got some digging to do. But anyway, okay. So what is the prediction for the best performer and the worst performer this year? So we meet one year from now. What are the 2 names?
That's a good question. Lisa, you got any answers for that one?
That's really hard.
I know.
If you had to pick one stock,
one stock, that's going to be the winner.
I'll tell you. Besides my favorite, Amazon, which I can't say all the time, I'm going to say something. I'm going to because that would fit with my consumer discretionary. But I think there's areas like med tech that haven't performed well. Maybe a name like it won't be the best performer, but a really solid performer would be maybe like a Medtronic, something like that. It's got a valuation that's very reasonable. That hasn't performed that well for the last couple of years. That I think things are getting better there. I think I name something like that.
And the worst performer?
Ooh, and the worst performer, I think something that's I'll go Palantir. How about that?
Oh. Whoa. All right. I will give you another 10 seconds to think about it. I'm going to go wild on this one. I'm going to say the best performer this year is going to be Lyondell.
Oh yeah, there he goes. Right, talking right to you.
And I'm going to say the worst performer.
I'm struggling with the worst performer.
I'm going to say the worst performer is going to be Albemarle.
Albemarle, okay.
Same sector.
Yeah. Look at that. He's a hedge fund guy.
Yeah.
Going long one and short another.
Yeah. Okay, go ahead.
So I think the best performer, I don't know, I go with healthcare.
Oh, yeah.
I go with Eli Lilly.
For
Wow.
best performer?
Yeah.
Whoa.
Wow.
Whoa.
That's aggressive call.
That
I don't
is.
know.
I think it's very aggressive. I'm probably really, really wrong. Very wrong,
It's fun
probably.
to think about, though.
Yeah.
But
Okay, who's the worst?
that's what I'm struggling with. I don't know.
Actually, I'm gonna while you're thinking about it, I'm gonna swap my Albemarle.
Oh,
I'm gonna
okay.
say Nvidia is gonna be the worst.
Nvidia. I don't know.
It's gonna blow up.
Well, if that's the case,
Really?
the market's not going to be good.
I know.
So
I know.
Yeah,
I'm
yeah.
calling. I'm hedging myself.
But maybe
right
not
now.
the
I see
worst
that.
performer. Like that is like a tough call to be like the
the
worst.
worst.
Of
That's
the
what I'm saying. That's
worst.
why
Yeah.
I think Medtronic.
Well,
seem to be the
in reality,
best.
when
kinda-
we circle up a year from now, I'll write these down and then we'll come back and we'll say who was the closest.
Yeah. So Lisa, what do you got? You got a tech name or something?
I
Or
take
you-
strategy.
Oh, MicroStrategy?
Mm-hmm.
Oh.
No,
Oh.
strategy.
MSTR? Is that the one?
Yeah, MicroStrategy.
Yeah.
The Bitcoin type?
Yeah.
Okay.
And now it's just strategy.
Oh, is it?
Yeah.
Oh,
Oh,
Yeah.
I
oh, I
got-
didn't
boy,
know that.
I
Yeah.
guess
I don't follow that
I guess
close
our
enough.
precious metals person really got the whole market covered.
But I think, yeah,
That's fine.
I think
Nice.
I think the business model is just maybe, yeah,
Bitcoin.
yeah. I know, but it's like, it doesn't mean negative.
So what are you
for
saying? But okay, all right.
No, but I think it's just company specific,
Okay.
just not
Yeah.
like future proof. I don't know.
Okay.
Yeah, so I think that's the worst. And Eli, that's a tough call. So
Hmm.
I mean, there's a small probability that I'm right, but I'm rolling with
Well,
it
in
anyways.
reality, it's a relative game
Yeah,
because
that's
it's
kinda
only
where
three of
we're
us.
not
so
gonna.
it's-
We're not
you're
gonna
not
pick,
gonna pick
the
best.
1 out of 500. We're
Right,
not
because
gonna
that is
get-
tough. It's like, what the hell, right?
Yeah.
I don't know.
Well, think about how many that if you were to go back and look at the list, you'd be like, I should have picked that one.
Yeah.
Because
We
I
did
didn't
something-
I didn't let you study for that question. So
We did something similar last year.
Oh boy, Lisa. dig
Yeah,
up
we did like
records.
the can you remember we did like the draft? The
are we
Yeah.
having an accountability session here? I
Um,
wasn't here for this.
I think-
Good for you.
think
I wish I
we-
wasn't either. I think I picked Amazon.
Yeah,
It took barely
wasn't
up.
either. And then we had something else with the brackets and stuff. That,
Lisa can dig that out for
Okay.
next episode.
yeah, and I
Alright.
think Tyler got the award for that
Yeah.
one, unfortunately.
All right, everybody. Well, thanks. Hopefully everybody had a great holiday season, and we will see you next time. If you like this, like and subscribe, and we'll catch you next time.